How is inflation affecting gold? Aren't you tired of hearing about and talking about inflation? Regardless, we have to pay attention to it. And last week clearly showed us we're not out of the woods. Inflation came in hot. Before we begin, remember to like this video and subscribe for more economic updates. Here's the good news for those of you holding precious metals. Gold and silver held strong in the face of inflation reports and their potential implications on interest rate cuts. This is also good news for those of you considering buying gold and silver. Last Wednesday, the Labor Department informed us that the annual Consumer Price Index accelerated in March for the second straight month, rising to 3.5%. It's the highest level since last September. The following day, the Labor Department returned to tell us that the Producer Price Index, which tracks inflation at the wholesale level, rose 2.1% year over year in March, the second straight month it accelerated. The report surprised and disappointed traders who were expecting a Fed pivot to rate cuts. The Dow Jones Industrial Average lost nearly 500 points on Friday, closing down nearly 2.5% on the week and giving back almost all its gains on the year. Precious metals appeared to shrug off the diminished prospects of rate cuts and maintained their strength. In fact, gold rallied past $2,400 per ounce for the first time in history on Friday, before ending the day at $2,360. Silver reached $29.90 on Friday, its highest level in more than 3 years. The price strength of precious metals to last week's inflation news supports what strategists have been suggesting, that the historical relationship between metals and interest rates is not as important as the perception of gold and silver being a store of value at a time when economic and geopolitical uncertainty are running high. In a statement highlighting precious metals' apparent rate insensitivity, Jim Wyckoff, senior analyst at Kitco Metals, told Reuters last Friday, "What's really telling about the strength of gold is the U.S. dollar index and Treasury yields are climbing, yet gold continues to rally strongly. That's very indicative of strong safe haven demand." Since the end of February, when gold started to take off, strategists have suggested multiple drivers that are pushing momentum unrelated to interest rates. These suggested drivers have included stronger demand for gold by individuals, asset managers, and central banks for the purpose of hedging against such concerns as heightened geopolitical tensions, political turmoil, U.S. fiscal instability, and general economic uncertainty. And the result feels like serious excitement for gold right now. As Ola Hansen, head of commodity strategy at Saxo Bank, said just a handful of days ago, gold continues to go from strength to strength. Last Friday, the day before Iran's missile attack on Israel, esteemed economist Mohammed El-Erian, in a post on X, said this about gold's current price strength. Gold prices are up again this morning, almost 1%, as more investors view it as a better hedge against geopolitical risks than government bonds due to U.S. inflation concerns. The run by gold and silver over the last 6 weeks has been impressive, to say the least. The metal's powerful price action certainly is one reason. Over that relatively brief period, gold has increased by 15%, while silver has climbed more than 20%. Ever since the global health crisis, it seems the norms are being rewritten. We don't know where gold and silver are heading because the traditional drivers don't seem to have the same influence. What we see is gold and silver moving towards a foundation of structurally based economic and geopolitical fundamentals. That is why we see both central banks and money managers taking bigger positions as the next few years seem uncertain. In the face of this uncertainty, it might make sense to consider holding gold and silver just like the central banks and money managers plan. Until next time.